After selecting stocks, compare them with these 4 conditions. If there are still stocks that meet the conditions, then it is likely you can buy them with confidence. First, avoid stocks at their yearly lowest on the first board, as they generally have no follow-up. Second, avoid one-word boards, as you either can't buy them, or if you do, you'll face losses. Third, avoid stocks on the first board that haven't broken through the annual line or have been recently suppressed by it, as their momentum is poor. Fourth, avoid stocks with a circulating market cap greater than 20 billion. Hot money can't move large stocks. Avoid stocks with Shanghai Hong Kong Stock Connect. It's the biggest short-selling force, and many funds avoid these stocks. The sixth type, stocks over 4 boards or doubled in price in the last month to a year and then fell back, should not be selected because there are trapped positions and the selling pressure is too high, making consecutive boards difficult. Now that we have discussed stock selection criteria, let's talk about the buying opportunity at the board. It's best to buy on the board. Why is buying on the board the best? Many people are puzzled, isn't it more profitable to get in early? And there's a chance you might not be able to buy on the board, right? Well, buying on the board does yield less profit, but it has higher certainty. This is about trading price for certainty. You can also start paying attention during the call auction. What should you look at? Look at the trading volume at 9:25. If the volume and turnover reach 8% to 12% of the previous day, what does that indicate? It indicates strong market acceptance, and it could open with an instant board at any time, so you need to focus on it and be ready to get in at any moment. But it's best to choose buying on the board to avoid losses. So, what if you pick a stock that has a board explosion? Usually, after analyzing with my stock selection conditions, the chances of a board explosion are small. However, it could also be the main force testing the market and opening the board a bit, so there's no need to panic. Just wait for a rebound, and if you're bold enough, you can even increase your position. It exploded, and there was no rebound until the close. What usually causes this? It's usually because of poor market sentiment that a board explosion without a rebound on the second board is about 3%. The main force spent money pulling the board. They wouldn't choose to sell at a loss. That's why this model has a high success rate and a good risk-reward ratio. So, what should you do after a successful operation? If the next day it hasn't hit the limit up by 10:30, sell it quickly. It's okay if you sell, free up the position, and wait for the next opportunity. How do you control your position? Using 1 or 2 tenths of your position for the second board is enough. Experts can use 3 or 4 tenths, but each time operate with 2 or 3 varieties. Do not exceed 4, as this will greatly improve your success rate.